Let's get you all the business news now. And Sensex and Nifty reversed losses from Thursday's session, ended the day at a record high. Financial and FMCG shares led the headline indices higher. On the other hand, IT stocks traded under pressure. My colleague Hiral Dadia joins us with all the market action.
The rally that we saw in the markets in today's session actually gave a strong leg from a weekly close perspective as well. Clearly, if you see in terms of Nifty as well as the Sensex, a record closing is what we've seen. In fact, Sensex was up almost nearly 467 points, and you had Nifty which ended above those 18,800 levels already. It was ITC, HDFC Twins, RIL that led the rally, and the PSU banking space also advanced in trade today. In fact, clearly the bank Nifty has outperformed the benchmark indices, and as we've been discussing, the participation from bank Nifty is absolutely crucial to scale new heights. IT real estate was under pressure, and if you see in terms of the broader markets, they ended in the positive, but there was underperformance, I beg your pardon, vis-a-vis the benchmark indices. The breadth was absolutely in favor of the bulls. If you see from a technical perspective, what analysts are indicating now is that clearly 43,500 is proved to be a strong support level for Bank Nifty, and Nifty on the other side has momentum on the upside with writing of in the money put options in the monthly expiry and remains the most bullish index. If you see in terms of the top gainers, HDFC Life, SBI Life, Bajaj Finserv, DRL as well as Titan, these provided momentum, whereas there was pressure in terms of Wipro, Bajaj Auto on the back of the impact that we could see on the on Lira devaluation, TCS, BPCL, Tech Mahindra, TCS again on the back of what's happened with the entire $2 billion deal. In terms of the newsmakers, ITC touched a 52-week high. Ashok Leland was in focus as well after the investor meet and the positive commentary there. Nykaa has been upbeat again in terms of new launches, strong moves there. Z Entertainment, NCLT has deferred the hearing to the 26th of June, so we'll be watching out for that one. Ramkrishna Forging, Titagar Wagon, again, Rights, all of these counters were in focus on the back of an order win. And you had life insurance companies that saw some strong traction in today's session. One more stock to note, IQ Lightning had a spectacular listing in trade today. So overall, a lot of newsmakers, the positivity has come back to the markets, and that has been in action as well. Back to you.
ValueQuest investment advisors Ravi Dharamshi believes that capex sectors like defence and railways will emerge as the sunrise sectors. Speaking to BQ Prime's Neeraj Shah, he says there's an upside potential in chemical stocks and shares the outlook on electronic manufacturing industry. Listen in.
Defence is one. Railways is a large opportunity. We have not seen this kind of investment happening. If you see in the last budget, the largest percentage and absolute increase in terms of capex has happened in the railway sector, and it is only the first year. So we are going to witness more and more money being spent, whether it is on wagons, whether it is on a signaling system, whether it is on all kinds of upgradation and modernization associated with railways. Third sector, which right now is undergoing a little bit of pain in the China Plus One story, is the chemicals. However, I do strongly believe that chemical story is not over. We have not reached a stage where you can say, let's forget about the chemical story for now. These companies will become far, far bigger from here as well. But I think for the time being, I am a little neutral to underweight in the chemical sector. Then electronics manufacturing is one big space. The stocks have done tremendously well in the last 3 months. And I'm not saying that I have no idea whether the stocks will go down or up from here. But at the same time, the opportunity size is really, really large. And we are going to witness the entire electronics ecosystem, starting with the assembly, moving on to the components, and eventually the entire products getting manufactured in India, whether it is an Apple iPhone or whether it is a Samsung. And that is going to open up big opportunities for some of the manufacturing companies in India. And I think this trend is also a minimum decade, if not more.
Now, India has made a strong pitch for a sovereign rating upgrade with Moody's and also questioned the approach and rating parameters. With the hope of getting a rating upgrade, the CEA and Financial Ministry presented India's point of view to Moody's senior executives in a meeting held today. My colleague Janani Janarthana joins us with more details.
We bring you updates from a developing story here from the North Block, where India is in discussion with rating agencies to upgrade its sovereign credit rating. Now, if you remember, this discussion has been ongoing since India's budget was announced this year, earlier in February. Moody's, S&P and Fitch have been in dialogue with the Finance Ministry. These discussions have been chaired by the Chief Economic Advisor, Anant Nageshwaran. As of today, we are learning that Moody's is in consultation and meeting with the Finance Ministry, and they're discussing about a possible sovereign credit rating upgrade for India. An official who left the premises early told us that, they are hopeful, and India is hopeful for a credit rating upgrade, and Moody's has also acknowledged the positives in India's economy so far. However, they will not be indulging in a knee-jerk reaction. Items that were discussed involve India's budget, debt levels, disinvestment targets, so on and so forth, which is likely as the economy discussion comes up during the course of the day. As this is a developing story, we'll bring you more updates, but the momentum here that we're noticing is that India is hopeful for a positive increase in its sovereign credit rating. Back to you.
Now on to an exclusive. BQ Prime has learned from sources that Adani Electricity has received over 3,000 applications from the customers of rival Tata Power for migration in Mumbai. What exactly this means for the power provides and why this shift? Here's a report.
The battle for power in India's maximum city is heating up. In just the last 2 months, Adani Electricity has received over 3,000 migration applications from residential and industrial customers of rival Tata Power. That represents a cumulative power demand of 350 million units. Sources have told BQ Prime that the shift in customer preference is a result of the divergence in charges by the two electricity suppliers. Following the Maharashtra regulator's latest order on tariffs for the current financial year and the next, Adani Electricity has emerged with the lowest tariffs in Mumbai. Tata Power's tariffs, on the other hand, were the highest. The Adani Group company also contracts around 30% of its overall requirement for Mumbai from renewable sources, bringing down costs. But sources have told BQ Prime that the migration won't happen immediately. The laying of new lines will only take place after the monsoons, meaning that customers that want to shift suppliers will have to wait till October. In the meanwhile, Tata Power has approached the Appellate Tribunal for Electricity with an appeal to stay the tariffs. That order is expected in July. Adani Electricity currently holds a 50% market share in Mumbai, selling between 9,500 and 10,000 megawatts of power. And with power demand reaching new highs, battle for primacy in the city that never sleeps is likely heading into a new phase. In Mumbai with Vikas Srivastav, this is Alex Matthew for BQ Prime.
Now, India's domestic air traffic surged 36% on a year-on-year basis in May as per the DGCA data. The airlines carried over 1 crore passengers during the same month. Among airlines, Indigo continued to maintain its position as a market leader, with Go First halting operations on the 2nd of May. Indigo's market share grew significantly to 61.3% in the same month. Meanwhile, the market share of Tata Group-owned airlines has improved to 9.4% as against 8.6% in April. And with Go First's collapse, Air India also witnessed an increase in passenger travel to 12.44 lakh in May. Now on to some updates from the Finance Ministry, and the 50th GST Council is scheduled to meet next month, and sources tell BQ Prime's Janani Janarthan that the look at tightening the regulations on cracking down on fraudulent claims of input tax credits. Over to you.
We bring you news on the GST Council front. The GST Council meeting is scheduled to happen on the 11th of July here in New Delhi. And we're learning that on the agenda, there might be 2-3 important items, particularly the GOM on casinos, horse racing and online gaming. Now remember, the GOM report on this subject has been submitted by convener and Meghalaya Chief Minister Conrad Sangma back in December. However, in the last meeting in March, they could not take up this matter due to paucity of time. This time, however, the mechanism of levy and the rate of levy will be discussed by the council and put to vote. Secondly, a rate reduction on GST for cement is unlikely to be taken up in this particular council meeting. As you remember, GST on cement is at 28%, which is the highest slab. Also important is that this council meeting will be looking at cracking down on fake registrations, on fraudulent ITC claims. If you remember, the CBIC has launched a special drive to crack down on fraudulent registrations, which has been on way since the mid of May. It has been identified about 43,000 cases have come to light where there have been fake registrations. This is to a financial tune of 15,000 crore of fake ITC claims have been noted by the department involving 10,000 entities. This special drive will go on till the mid of July and is likely to also have an effect on the council meeting that will happen. Last but not the least, the convener of the GST GOM on rate rationalization will also be reconstituted. The last convener, Mr. Baswaraj Bommai, who was the former Chief Minister of Karnataka, submitted the interim report back in July last year. A final report on the subject is still awaited, and we'll bring you more updates as we learn from that situation. That's all we have for you now. Thank you for tuning in.
All right, with that, time for us to slip into a short break. Do stay with us.